All right, welcome everyone to another edition of Market Talk with Mark Wood. We're going to dive deep into the markets. Have not been any shows. I actually took a nice little break with the holiday weekend. Also, in the last 4 days, the price hasn't done anything. Yes, it's gone up and almost hit 60, and yes, it's gone down and almost hit 55, but we are literally back to exactly where the price was every single day last week. So, you know, on a longer term picture, not much has changed. Uh, I'm assuming everything is live. Let's see. Are we good? Live chat, please confirm audio video that you see myself and Mark Wood. And Mark, thanks for joining me again. We skipped our show last week. We were both kind of busy. And this is good because now we get to close out the month. Since I have not done a show in the last 4 days with Matt McGregor. I'm going to go through my charts for about 5 minutes, and then I'm going to
Okay.
hand off the screen share to you. I just need another minute because my trading view is stuck. How are you, Mark? How's life?
It's good. It's busy. It's been kind of slow, and then it got really busy. And now after this little holiday break, it should kind of calm down again. Got some fall weather coming in Maryland, which I'm loving. After spending the year in Florida, which I loved as well. But 0% humidity and 70 degrees, I'll take that.
Yeah, that's what it is right now here in PA. It was actually super cold overnight. It got down to like maybe 5 Celsius or less. It was like 40 something degrees. And hey guys, 2 weeks away from the unconfiscatable event in Vegas. Still, Mark is still trying to figure out if he can make it. But 2 weeks, it starts in 2 weeks. That's why I'm here in the woods. I'm just going to focus on work for the event. This will be the last unconfiscatable conference that will ever take place. I am absolutely exhausted trying to do these, but the unconfiscatable poker game may stick around once or twice a year as part of other events. So please sign up and join us. It'll be an incredible time, and see a bunch of you in Vegas. All right. Let's take a look. I haven't looked at charts all weekend either. Now, this is the weekly scale. The weekly candle ended badly. The last time I did a stream, the weekly candle was rallying all the way to $61,000. I was hoping we can avoid a red star candle, but we did not. We got the red star candle. That is very, very bad. The current candle is consolidation. I almost have to lean towards the fact that we're going to be pulling back and ending this whole thing on a on a weekly MRI buy. It will likely come off the blue moving average on the weekly scale. That should be my 50 period moving average on a weekly scale, but I don't think we're going to breach the low. I think we might get a new closing low. We may get a secondary swing low. I find it hard to believe that we are going to fall below $49,000 because time is in our favor. And while September is usually a bad month for the stock market, October is one of the best months for the stock market. And I still believe there'll be a rally into year end. I still think Bitcoin will perform very well in October, November, and December. But September could be very, very rough. I'll let Mark look at the monthly chart and 2 month chart. My allocation remains 50% bullish. Sometimes I think this is crazy. Sometimes I think, why isn't it better? Especially when even a couple of days ago, we were trading up at almost 62,000, which is approximately my entry. Because time is on my side, I'm going to stick with this allocation. I doubt I will remove it at any point. I am very confident we will be reversing for the bull market very, very soon. And I would rather go leverage long to make up for the difference. It's unlikely I will remove it if we do crash and close a 4 day candle below 55. That's the only way I'm going to lower my allocation at this point. This is a daily chart. We're now consolidating in the red area. We were consolidating in the green area, which was above 62,000. When we were above 62,000, I was very, very bullish and very confident we were going to try to hit 70 later this year before a pullback, or even this month before a pullback. Now we're all the way in the red area where I now think that more downside is very, very likely. We can get lucky here and get an MRI buy tomorrow, in fact, and that could rally us, but this MRI buy is happening within consolidation. And when you have MRIs within consolidation, they don't exactly reverse the markets. Here, the last MRI buy we had was not in consolidation, it was within a downtrend. And so on August 7th, I was confident we were going to rally up a bit. But now I'm not. Nowhere near as confident as I was on August 7th because of the structure of the MRI pattern. That is pretty much it. Here's the short-term chart. This is a terrible morning. Looks like we are dealing with an 11 a.m. reversal. The 10 a.m. reversal didn't pan out. So you try again at 11, and the 11 a.m. reversal is working nicely. I've been talking about this trade quite often on this channel. And where would I have gone long? Well, I need strength in order to buy off a reversal. One option is to buy right here at the 1020 candle as it's breaking the doji. That trade would have failed, probably created a break-even trade. Round two, I would buy it somewhere in the middle of the second green candle. Worst case scenario at the top of the second green candle right here. That's the worst case scenario. I would already be up, not much, $200, but I was only risking $200. So since I've already been up more than I'm risking, it's a break-even stop loss, and hopefully it continues to go up. All right, Mark, I'm gonna hand off screen share to you.
Hey, hold on. Keep your screen on there. I'm just curious. I know your moving averages, but I love this. What is the moving average right now that's rejecting the price? What's that short-term moving average?
That's a good question. Actually, I have no idea. I don't pay attention to moving averages on the short-term charts. They're kind of there. We can go and take a look.
Yeah, let's just
I'm assuming that's the 20 period moving average. And I'm
okay.
kind of assuming that, because this particular indicator has multiple moving averages for different time frames, but it's designed for daily and weekly. I'm not sure which one defaults to the sub daily. So if I change this to say 200, let's see what happens. It
Okay.
moved, right.
So,
So that was the 20. So that it was the 20.
the only reason I asked is because I'm such a moving average nut job and have studied them for so many years, every single day on every time frame and hundreds of different moving averages. But I just find it fascinating that there you have this key moving average set up, and even on the 5 minute chart, I think a lot of this has to do with maybe bots being programmed to specific moving averages. But you know, even on the 5 minute chart that you just had pulled up, that 20 period moving average is relevant. And you could develop strategies around that. You could make that like an initial take profit area if you're short-term trading or scalping or something like that.
Yeah. Yeah, you can. I try not to use moving averages on short-term charts. I just don't see them as being as relevant, but I haven't done much backtesting on that. And you can see the S&P 500 was having a very bad day to open the new month versus the close on Friday. S&P was down, wow, 90 points this morning. That is insane. Absolutely insane. The S&P is up since the 11 a.m. reversal right here, and hopefully it can stick around. Honestly, I wouldn't mind being long the S&P right now. It has fallen so much. It's unlikely it would fall much more. The weekly chart, yeah, it's a big fall for one single day.
But look,
But the S&P has plenty of support. It's still looking very bullish. I'll let Mark dive deeper into it. I'm assuming the big stocks are down, like Nvidia. Yeah, uh, Nvidia's down. I did say that earnings will be uneventful for Nvidia. Nvidia fell very little on earnings. Option traders certainly lost money. Option speculators lost money on that. Uh, it seemed too quiet. I didn't think it would move a lot. It moved a little, and now it's moving more. And I'm sure Tesla is down. Not much. All right, Mark, I'm gonna get off screen share, and it'll be up to you.
okay. So first of all, let's talk quickly about the month of September. I just have some random stats kind of memorized. We've had, I think this is the 14th September in Bitcoin's history. 10 of 14 are negative months. So it's typically a negative month. However, there is one interesting caveat to this. So that means that we've had 4 bullish Septembers, or let's not, or green. And the average drop and rise is about 7 to 8% on average, with some massive drops and some massive swings and really small ones. But here's one interesting thing to consider for September. Of the 4 that have been negative, um, two, I'm sorry, of the 4 that have been positive, 2 of those positives came in election years, and we are in an election year right now. So 50% of the positive months have of September's in election years have been positive. So that gives me a little bit of hope that we might see a little bit of a drop in September and then a rally into the end of the month. And also, what you just pointed out on the stock market is no surprise. We can take a look at something really quick. But several streams ago, I kind of did a breakdown on election year market behavior, and it's very, very common for the S&P to just kind of top off in September and cool off, go sideways, maybe see a correction. So what's happening now is not a surprise, but let's take a look. Let me take a look at something kind of off the wall a little bit. Um, you can see my screen?
Yep.
Okay. So what I have here is the 2-week Ichimoku chart. And this is interesting to me. I think this is a really very simple, basic outlook, okay, for where we are with the overall trend, and we'll take a few different looks at this, but you don't really have to know too much about this indicator. I have this blue circle back here, so let me zoom into this area, because I still think that we're experiencing something similar to this early part of 2016, combined with some other things that might even have happened earlier. But what we're looking at right here is this bullish cross between the Tenkan and the Kijun, which is the blue and the red. Now, we got the bullish cross right here after this massive spike in 2016. And then this huge sell-off that wicked all the way down to the red. Okay. But if we look, and I think this is really important, all closes remained above the blue Tenkan, all of them. And each touch of this was a very critical dip buying opportunity. And then we're looking forward, we had the cloud turn green, and that was kind of right at the top, actually, right after the 20K top. The more important thing to me is the cross and these tests. So now let's take a look at what we've been seeing currently. We have the cross. We got the bullish cross right here. And so far this drop to 50K acted similar to that really nasty drop we had back in 2016, down to the red. To mimic that, we would have had to see the price go to 45K, which I did think was a possibility. But one thing to be watching is right now is $56,000. And Tone, you mentioned like 55,000. I think somewhere between 55 and 56 is a key level of support that we have to be watching for. If not, we're going to dig deeper into this giant wick. I kind of do agree with you that these are the lows at 50K. There is one scenario that opens up 47,000-ish with this broadening wedge that we're looking at. However, let's just put a rule to that. We can't really consider anything too bearish until we see at least 1 or 2 weeks closing let's just say at least 1 2-week candle closing below this Tenkan right here, right? Now, in theory, the cloud twisting green should be bullish for the long term. We can see if we look, let's look back at 2020. We got the bullish cross. We got the bullish cross right here in this long consolidation. Very similar, very similar summer consolidation. I'll zoom in a little bit more. Here's the cross. And this shows you how bullish that was. There were 0 tests of either the red or blue. But as the cloud was twisting green and price was approaching it, we still saw another run from $23,000 up to 60K. So this is, to me, this is just a general outlook. Let me zoom back out again. And right here, I just have these all-time highs. You know, all this price action took place as Bitcoin was running into the all-time high. And let's take a look at this as well, because this is interesting. As it ran into the all-time high from 2013, we can see all this turmoil right here, which is to be completely expected. You got a sell-off down to the blue, a climb, another sell-off down to the blue. So we are kind of experiencing the same thing at this current all-time high. We reached it, sell-offs down to the blue, another reach, and a sell-off down to the blue. So what I would like to see is in this early part of September, the price holding weekly closes. I don't care if it dips below. I still would like to see weekly closes holding around $55,000 or $56,000. Losing that opens up some more bearish scenarios to us that we can talk about when the time comes. So personally, not financial advice, I see 56K, 57K, even 55K as a risky-ish dip buying opportunity. Maybe not necessarily for trading unless you're very skilled in trading, but for long-term accumulation in the bull market, which kind of goes against what Tone and I show when we're looking at Consensio and everything like that. So let me go over here. You can see the
yeah, I can see it. Before you go there, right? I just want to add something I always say, right?
yeah
You mentioned 47,000.
yeah
For me, the 47, anything between 50,000 and 47,000, for me, that is not a buy zone. And the reason it's not a buy zone is because it's a double bottom scenario, and I don't buy double bottoms. I would need to see a print below 47,000. I need it closer to 45. I need, if we are going to head below 50, I need it to be noticeably and significantly lower, not debatably lower, whether it's a double bottom or a lower low. I need to be a clear lower low. The only way I would buy 47 or 48, which is technically a low, the only way I'm buying it is if some things align, like the MRI with the reversal candle and the capitulation candle, and preferably a moving average, but I don't think there are any in that zone.
right.
Maybe there, I'm not sure actually. You're the moving average expert.
Uh,
There aren't any on my charts.
So let's just take a look at this really quick. Let me add some horizontals back to some key levels. So here is an area. Let's just call it around right here. This covers this swing high before correction, this dump, this wick right here, and as we can see, the price wicked right down to it. So that is support. 50,000 is support. So what Tone is saying is he doesn't like 47. The only reason I say 47, it has to do with actually a pattern. And we do have one, I can put one horizontal right here that gets us into that 47. But I do see, as you're saying, Tone, I kind of see this area here. Let me see around. Yeah, right around here, 43, 44, 45, just from without even looking at moving averages, just kind of like looking at key stop and reverse levels right here. So yeah, I agree. But let's switch over to this really quick. Um, I love this chart. So this is just the general elections outlook. We've covered this really early on in the streams, and one of the remarks I made just kind of studying the past history is, there are always exceptions to the rules, but in general, here we are, so close to the election.
Oh, so sorry, Mark. Mark, can we back up a second?
Yeah, what do you need?
You said FDR 4?
FDR was elected. I
For the fourth term? I thought it was only 3.
think it's four. I'll have to go back and double check that, but I think it was four.
Okay.
I think it was
Okay, I'm gonna Google it. Wow, I thought I knew American history. Hold on, let me check.
because it was during a crazy period of history, and
No, I know that. I know he's a communist dictator, but like I'm not. Okay, let me save that for my personal channel.
okay, yeah, we can fact check that, but I'm fairly
You're
certain that
right. You're right. He was elected in 44. He died like 6 months into his presidency, but he was
right,
elected for the fourth time.
right, 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 and so the point is we're going to take a look at this. This massive channel is just unbelievable, and the price has just been living outside of it for several years since 1995, since kind of the ramp up into the dot-com bubble. But the point of this is the green verticals are the elections, the November elections and the election years. And I was just wanting to see what the S&P does in general coming into elections. And the pattern that I've noticed, it's not 100%, is that typically the markets are out of steam in September. People go risk off because then the political insanity begins. And, all the crazy news stories come out and nobody knows who's going to be president. And so um, people just de-risk. So this little sell-off right now in early September, this close to the election, is not surprising to me at all. I would be surprised to see in September this wick of July taken out to a new all-time high in September. It's possible, but being said, if we're looking at the monthly close, we're going to take a look at this in a second. This is a massive. Now, let me ask you something, Tone.
Yep.
Is this a topping candle to you or a continuation candle to you?
That top one? Oh,
This
the green one.
green one.
That's a great question. So, um, there will be textbooks that call this a topping candle. To me, it's a continuation candle.
I agree.
I do not consider this candle as a topping candle. Now, if there was, and this won't happen on Bitcoin, if this candle was on an island, like if this candle was way higher, right? If there was a massive gap between the green candle and the prior green candle to the upside, I would then be a little more skeptical on this candle being a continuation candle. But without a monster gap, because there can't be a monster gap in Bitcoin, it's a 24 market, right? Um, if there was a monster gap, it's different. It's called a, what do you call it when you have a hammer candle at the top?
Um, um, is it? It's not a dragonfly doji, is it?
No. No, this is a hammer candle at the top. I wouldn't
Oh,
call it a
oh, oh,
doji
oh,
candle at
a
all.
hammer candle at the top. I got you.
Right. And
Yeah.
yeah, I don't know what you call that. A lot of people see this candle as a reversal candle. I do not. Uh, even if it was, even if it did had a little bit of a gap, I still wouldn't. To me, that's a continuation candle.
Well, also, I mean, this is an 8% wick. That shows a lot of buying pressure. People were, traders, buyers, investors were very excited to buy down into low 5,000s. And so, yeah, so what I have studied and experienced and anticipate is September for the S&P to be sideways, perhaps negative. October, maybe even a dip into October. And then by the end of October, right around, let's just call it on the election, typically we see the price starting to climb. And let's go back and look at the last election cycle, and we can see that exact play happening. So here we are, topping in September, negative October, the world's going to end. And then holy shit, look what happens. We start the new bull trend. Let's go back to the next election. We had the top in August, early September. So I kind of look at for the tops in the S&P mid-August to early September. I just generally have found in recent election history, the market is done for a while. We have a negative October, and then lo and behold, the world isn't going to end, and the market goes bullish again. So would I expect something similar? I do. Here is 2012 election, and hold on, my mouse is screwing up. So 2012 election, once again, we have a top in September, a negative October, buy the dip in November, and bull run continues. So I don't, the only thing we can consider is some kind of massive recessionary event, and there are a lot of signs of recession, but I don't know, Tone. Let me ask you this. Would you, based on what I just showed in the last few elections, would you anticipate anything too off the beaten path of that? Negative September, negative October, continue this bull run.
I think I'm not expecting a negative October. I never expect a negative October. October is one of the best months
It
in
is.
speculative markets.
It is.
I'm expecting a positive October no matter what. It may be not crazy positive, but I am expecting a positive October. This is your monthly chart, right? Yeah, I see the S&P prior to the last election did not have a great October, but the
Right.
low was still made in September.
True.
Keep that
Yeah.
in mind.
Yeah.
Okay. So I'm expecting the low to have already been in or the low to be made this month. Is it possible that the candle is red in October? I guess it's possible, but I'm going to lead towards a green candle month in October, and this month could go either way. Okay,
So
so just in case, I would change that fourth term FDR to Truman. FDR was president for 3 months out of the 4 years. So he passed in April after starting his final term in January. So that's literally he was only president for 3 months. So I would
okay.
change the FDR Part 4 to Truman, even though they're both from the same party, right? They're
Yeah.
again. I'm
I
not gonna let me not say the M word again.
I can edit that or just put it in there. But
Yeah.
again, and even going back to that term, that was positive. Um, there's very few presidents have seen an extended negative market. Truman did. Right here, Nixon saw nothing but decline after getting elected. Reagan kind of saw a decline after getting elected, but so if we're just going on historical
Oh,
patterns,
don't forget about Herbert Hoover. He got of all the presidents who got screwed the most. That would be Hoover,
yes, yeah,
right?
Herbert
And
Hoover,
right, and if we're gonna go off on a tangent, Herbert Hoover was probably one of the smartest presidents. Like the guy was just he was an actual like IQ genius. Like Hoover just got elected at the worst possible time, and there's nothing Hoover could have done to prevent the Great Depression. It was just bad timing. It's unfortunate that FDR took over after that, and then Truman, like two terrible presidents took over after Hoover, and then it kind of reset itself. Eisenhower was pretty good, and JFK and Nixon, I think those were great presidents.
yeah, that I mean we can see here, coming into the 1929 stock market crash, we can see, I kind of highlighted these lows, these are just kind of blips on a graph, but basically the S&P for almost a decade, not quite a decade, went up 400% into that stock market, into that rise, and then had a nice 85% correction to reset everything. And you know, if we actually really zoom out, that was the beginning of this bull market that we're still in right now. After all these market crashes, that literally was a great reset. Now, I'm going to show something real quick before moving on to something else. I have this eyeball. I have this eyeball drawn. Time to July 2030. I don't know about that timing. I need to do some research on that. But Tone and I have both mentioned that we think that the stock market has a lot of gas left in it. And, you know, the more I hear, even market experts, guys like Harry Dent talking about doom and gloom, and you know, we're in for the end. Tone and I are still saying that we believe that the S&P can double up to 10,000. But let's say that happens. Let's say we get that doubling into 2030, right here. Back into this channel is a 75% correction. And I do believe that at some point there is going to be some massive pain in the markets, unless the Federal Reserve is just going to stay completely committed to printing trillions and trillions and trillions of dollars, which is just going to keep inflation rising, and it's going to send Bitcoin to $1 million without a doubt. But we'll see. We'll track this as it goes along. But for now, Tone, I was just talking about how you and I have how you and I have been talking about the stock market potentially still doubling from this 5,000, as a lot of people are talking for doom and gloom and market crashes. And I was just showing here, I've got this eyeball drawn out, you know, sometime after 2030, down into the bottom of this channel. And if we did see the price double up to 10K, getting back into this channel would be a 78%. Now, with a full 85% correction, that goes way down into the 1500s. But I'm not anticipating that anytime soon. You and I are still believing that this thing is going higher, right?
Yes. You know what? Can you draw on one more trend line? Can
Sure.
you connect the what do you call it? The 1929 high
Tops.
to the 2000 high and extend it?
Yeah, I like that. So there it is. Look. So now getting us, that's 7,000 into 2028. So to keep within this trend line and to get to 10,000, that takes it to 2034.
Oh, I think we're breaking that trend line.
We think we're accelerating above it.
Oh yeah. And then the question is, are we going to pull back to your upper trend line or your middle trend line?
Right. Right. Well, let's see. Breaking 10,000, or let's say getting to 10,000 by
Yep.
2030. And then going back into the middle, that's a 50-60% correction. That's manageable. That's manageable. Okay, let's move on real quick. So here's Nvidia. Here's the hyperwave Nvidia. We're back. So we had this massively bearish drop off of Tone's ideal shorting opportunity that he missed.
True.
and and then the weeks began to close above this weekly closing trend line, but now we can see that the price is dropping below it. I had a theory, and I'm kind of holding true to this. I think this phase 4 is going to get tested again. I'm not convinced that this red trend line is going to be able to hold through September and October election, and potentially 75 70, 75 might be an amazing dip opportunity to buy. But zooming way out. In fact, I think I have this drawn on monthly. This is kind of maybe 2 week even. There you go. I still see Nvidia in a pretty classic hyperwave pattern, and ran away from phase 4. A dip back down to phase 4. I think it should hold and take it higher, but we shall see. The next thing is, so this is my 60-day cycle chart. I am a casual observer of the cycles. However, I've mentioned in previous streams that after following Bob Lucas for an extended period of time, I watch them much closer than I used to. And I had this green horizontal drawn right here for early September based off of the prior 60-day cycle low in early July. And so far, we have gotten the low, and these are never perfect. As you can see, this last cycle ended 64 days. This one was very odd, very short, 45 days. This one was 56 days, 69 days. So we kind of got to add, I'm going to add one more horizontal. I'm going to add about 10 days out, because I still think that there's time around the 9th, or let me just go to let's just give it some time on the front end. But I do find it interesting that so far the low is put in right at the 60-day, right at the end of the 60-day cycle. So let's see if that holds. I still think that the price has the chance to trend down to 56,000, 57,000. Okay, here is our post-halving. I added something to this that makes it a little bit easier to see. We can see the purple highlights. So the purple is where I saw the price post-halving start to gain momentum. Now, one thing that is interesting about this really early phase in 2012 is Bitcoin. See, this is why I think what we're experiencing currently is a combination of 2012 and 2016. Because even though this was super early on, there was a spike in August 2012. It was $17, $16, but it was a new all-time high. And then it was sideways. So if I actually drew this bar back to here from when that all-time high was hit, it was 161 days. Perfect. That is absolutely perfect, because basically we saw the price going sideways into the halving after hitting an all-time high, which is what we've experienced in this current cycle. But
Just gotta correct you real quick. It was a yearly high. It wasn't the all-time high. Bitcoin hit $30 a year earlier. You just don't have it on the chart.
okay, yeah. And then back after the 2016 halving, it was about, so what I'm doing with these purple shades is I'm looking at how long it took to get past this swing high and really start clearing above it. And that started happening about right here. I can even extend this a little bit more to around 168, 150, 170 days. And moving to the next halving, here was the swing high right here. When did the price start really pushing back above that? Right around here, around 154 days. So currently we are around 126, 130 days. I think we're at like 1 day 34 or something like that. So nothing extraordinary until we get at least to 154, 160 days, which puts a timing into late September. I would like to see some momentum in Bitcoin, confirming lows are in and starting to make a move back towards these highs by late September, and we can maybe conservatively draw that out to after the election. But I actually would like to see October bullish. Point in all this is that so far, I'm not seeing anything in the current price action that is outside of normalcy. except for the fact that it did run to a new all-time high prior to the halving. All right, next chart is our simple outlook. This says we're in cash. Okay, this is just Heikin-Ashi charts and two moving averages. The moving averages are the 12 and the 26 EMA. The rule is you're in cash on the first candle close, red candle close after the moving averages cross, or I actually prefer to sell the bounces into the moving average. So instead of taking the loss, well, you're not really taking a loss because this got you in all the way back here at $28,000. So you're taking profit off of, let's see. So entering here-ish, if you're selling this rally, you got 120% profit on one trade. That is assuming you went all in here, which you probably would have scaled in. Point being this, we're still in cash according to this system. Okay. You might be holding some and selling any rally. You're going to be selling anything into $61,000 until it's support. So now what we're looking for out of this signal is candles to start closing green above 61,004. Now these are Heikin-Ashi candles. And then for the moving averages to cross, and then you will start entering back into bullish positions. This is totally different from Consensio, totally different from what Tone's doing, totally different from what I'm doing. Here's Consensio, all right, with my added yellow 21 moving average. So even on the daily, we're about to get the blue moving average crossing below. So this is not a sign of strength at all, but let's take a look at the 4-day. And what Tone and I wanted to see was this green candle that closed above the long-term moving average. We wanted to see this become support, $64,000. And if we're really staying strict to Tyler's Consensio rules, this black moving average is trending down. So even with closes above 64,000, with his super conservative mentality, he still would not be entering back into Bitcoin until that moving average began to curl back up to the upside. So Tyler is looking down and waiting for the price to get above $64,000, probably for several weeks. Our other system says wait until $62,000. If you are trying to accumulate and buy the dips, that's a totally different strategy we can look at later. Oh, before I flip off of that, let's take a look at the weekly.
Mark, just by the way,
Yeah,
if you look back 30 candles on the Consensio chart,
on 4-day.
yeah, if you look back 30 candles, oh, I'm looking at the daily. Shoot. Okay, never mind. Hold on, let me do this. Yeah. If the price does go back above 64,000,
Mhm.
it's likely that moving average is going to start trending up.
Yeah, I think you're right. Because it would start reacting to that as it's approaching 64K.
Yeah.
Yeah. Now, the ultimate super triple conservative look for Bitcoin Consensio is the 2-week chart. If you want to be super aggressive with dips, the black moving average is your biggest, lowest risk buying opportunity, which is going back into that double bottom zone that Tone is not liking. However, this is just a really clean look. One, we can go back to the entire history of Bitcoin. All it really takes is one close below the black on the 2-week chart, and the uptrend is over, and we're in bear market territory. So, my TA, my like high time TA analysis is telling me that the structure is okay down to 50,000, allowing perhaps for some wicks below, but no closes below, and 50 to $56,000. That's where I'm seeing support Frustrating time period as Bitcoin just moves sideways, shows no strength as the stock market is closing super bullish and whatnot. However, this should be a really clear visual that that $50,000 currently is a key market swing zone. Right here, we can just take a look at 2021. This massive 50% drop down to 58K tagged the black perfectly. If you were willing to take that risk, that was a massive buying opportunity. And I personally would be willing to take this risk buying again into perhaps a little bit higher low. But as Tone said, it depends on the scenario. If it's a weekly green star or weekly red star candle and the oscillators are pointing down and there's no sign of strength, then perhaps no. But here we are, very clean look on Consensio. And now here's something interesting I was looking at. This is just DXY, and this is potentially bullish. This should be bullish for the markets because this is a trend line going back a couple of years that DXY broke out of and then just broke below, and another trend line holding lows that has been broken. So now we're seeing the price of DXY. Did it create a new low? Did not create a swing low yet. I can put a horizontal right here. Below 99.6 could potentially be very bullish for the crypto market, Bitcoin market. I had this note over here saying, looking for a next major DXY top to propel BTC into the strongest phase of the bull market. I do believe we saw that. I mean, we can see here. Let me get rid of these. So DXY is trying to hold some key support. And this is the light green is the 55 EMA above the 55 SMA. So this is going to be support until it's not. What we're going to look for are these moving averages to cross, to flip 103 into resistance, and then to send the price back below these swing lows. That should bring some strength into the market. But DXY is, this sideways consolidation in DXY is holding up Bitcoin a little bit as well. The stock market is able to trend strong while the dollar is basically doing nothing. And let me put this on Bitcoin because we did take a look at this a couple weeks ago. I want to look on the 3-week chart. Here we go. Okay. Now, we looked at this in one of the very early streams. We do have the bullish cross that has taken place in the early phases of the bull markets in place. Right here, we got the cross in January 2017. We got a drop down to the gray. This is the 13 EMA fib numbers. And price kept moving up. We got the cross in 2020, kind of late in the bull market, but still with the price only at $26,000. It easily doubled and then some from there. So what we are wanting to see, and again, here's another look at $51,000 being key, because from a historical standpoint, it's very simple to see. As soon as I can take off all these moving averages, I just need one. As soon as we see one close below the yellow 21 on the 3-week chart, it's end of trend, right? So what this is showing us is this is just giving us confirmation of my idea of low 50K still being very, very important to hold weekly closes. Here is the end of the uptrend in 2014, closing below 460 bucks. Here's the first close below in 2018. Here's the close below. We got a nice rally, but still it was a lower high. And we can see, so look, let's take a look really quick at 2021. All these scary drops were buying opportunities down to this yellow moving average zone, to the 21 EMA. So I'm still considering, I'm kind of conflicting Tone's idea of double bottoming. I'm considering anything in the yellow zone and wicks below as potential buying opportunities. But you got to realize this is low risk, because if we get a close below, you need to be exiting, because we can see the price potentially can go significantly lower. So another point I wanted to make, Tone, is I do think that time is becoming a factor. Like, there are other reasons I believe that we need to see strength out of Bitcoin by end of year, because some higher time frame moving averages are going to begin to roll over and create strong resistance up here. So I would like to see lows settled by mid-September, and then consolidation and strength into the end of the year. Now, I want to show one thing really interesting. So I've got all these moving averages here. I only need to show one. I was watching this very closely. Now, if you follow Tone closely, the 128 simple moving average is something that he tracks regularly, and I do as well. So when we had this bullish rally, and here's another point I want to make. We don't track the CME chart too often, and typically we don't have to. However, there are periods of time that if you learn with your own analysis when to look at it, it is going to give you more viable and pertinent information than spot. And this period right here was one of those times. We were all really bullish with this massive bounce from 50K all the way back up to almost $65,000. Well, it did spike to 65K, but look, clear rejection by the 128 with a close below. If we had seen 3 or 4 or 5 days closing above 65K, I would have been mega bullish. I would have been looking for these highs to be taken out at 71, the next highs to be taken out. But instead, it got rejected. And we can see how important this moving average is on CME right here. This consolidation also taking place below the 128. So let's take a look. This kind of backs up my theory of what I just said.
Hey, Mark, the 128 on the actual Bitcoin price looks nothing like that line.
On the spot,
Yeah.
I know, but that's my point, Tone. Like there are periods of time where just finding a little nugget on the CME chart helps us to understand what's going on. And if we're looking at this summer consolidation here, the whole consolidation took place below the 128 on the CME at a massive rejection, spike down, rejection, 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 spike down, and finally 1, 2, 3, 4, 5, 6, 7 closes above. So here, looking at the current price action, it's very similar. We're never going to see price repeat exactly the same. But in theory, we lost the moving average back in July, had a nice run above it, however, could not hold it, gap below, fill the gap, and then rejection. So this is kind of this is a really simple look for us to say, once again, agreeing with some other things we've already looked at, as soon as we start seeing the price of Bitcoin closing back above $65,000 on a regular basis, like I would like to see a full week or two closed above it, I will begin to get more and more bullish. One thing we have to watch now, though, is this is a big moving average, and it is starting to roll over, which means it's going to be stronger resistance than even when it was here on the next pass. So that is going to be a sell zone for traders if they're buying a dip off of this. Now, what I'm watching on spot and CME, Tone, is this swing low right here at around 56.3 on CME. Once that is taken out with like 1 or 2 or 3 days closing below it, then parts of this wick open up. And I was watching this rising wedge pattern here, and it played out as expected. They typically will break down to the downside. So I just kind of wanted to point that out on CME. And let me go to the spot chart real quick. Let's just take a look and see where that moving average is on spot. Yeah. Okay. So as we can see, um, it was rejected and coming up here. So now I am going to alter this. Let me zoom out. Let me zoom out on this pattern right here, because this is still my basic overall outlook. I still see Bitcoin in this descending broadening wedge pattern. And this is one of the reasons. So the scenario that Tone and I brought up several streams ago was what a little bit of what is happening right now, of a rejection in September and a bearish October into the election, coming down into one more test of this, which is bringing the price into 45,000. If it drops severely, like capitulates into the election, now we're looking at $43,000. That gets people super bearish and flips the structure very bearish. But as long as price is staying within this broadening wedge, I'm still kind of sticking with that. Now, I am going to change this based on new information. I'm going to make this triangle like this, and I'm going to adjust this triangle as many times as I can. And the reason I have the blue circle is it gives me an idea to potentially time volatility. So we shall see. Maybe we'll start. We're kind of in the. I draw the circles about 60, 70% into the triangle. I could even start it here, just to get an idea of when we might see price dropping out of this kind of sideways consolidation. Like if we really look, if I just put a giant ellipse right here, it's going back to August, we've basically had the price between 57 and 61K, with a spike below and a spike above. And it's still kind of sitting in the very bottom of that range. So I'm seeing this as just a consolidation within this broadening wedge pattern. If this does break down, we could get a strong drop down into the bottom, but I'm not sure if I'm fully expecting that. What do you think about that, Tony? You think that that's that another trip down to this trend line is possible?
It's possible, but I'm not expecting it.
Yeah, I kind of agree with you on that. Okay. One thing I did want to take a look at, let's go back to the monthly chart really quick and just take a quick look at the indexes. And I'm just going to put my super simple look on. All I need is bands, 80 EMA and 21 EMA. Okay. S&P. So in general, on the monthly close with the S&P, I need my 21 EMA. There we go. In general, it's bullish. Anytime you've got to close above the short-term moving average on monthly, close to the top bands, it's bullish. Dow, looks the same. Now, there is one thing I saw in the NASDAQ that is a little bit concerning, and it might be what Tyler used to call canary in the coal mine. And if you've been starting to pick up on some of my Bollinger Band and 21 EMA analysis, I have discovered that, and we can see this part of history is a perfect example. Right here, as coming off of this top, the yellow 21 dipped below the middle Bollinger Band. My middle Bollinger Band is 18 SMA. The standard, the stock is 20. I just like how the top and bottom bands react to that slight change a little bit more, but I look at both. Anyway, the rule is once that yellow has crossed below and the orange is lost, the yellow is going to get tested with a very, very, very high probability. Now, here is and the yellow is always a target once the orange is lost. Here's a perfect example of it right here. As long as it's still below the middle Bollinger Band, it's always a target and typically is a potential buying opportunity. Now, here is where the rule shows very clearly. Back in 2014, all the way back here, the yellow 21 started to trend below the middle Bollinger Band. However, there were zero closes. I'm on the monthly, zero monthly closes. This is never, ever going to be a target as long as the months are closing above. And this is on any time frame. This analysis works. You can put this on the 5-minute chart. It's amazing how accurate it is. However, we can see as soon as we got this bearish month that started to finally significantly breach the 8 EMA, the 21 was a target and held dips, got a nice bounce off, and we're not expecting strength again until it's back above. So the NASDAQ is giving us a bit of a warning right now that we do have to pay attention to. All the other market indexes, the 21 EMA is firmly established above, but this is crossed. And I don't know if it confirmed cross on the last monthly close, but I do believe it will now. So now what I'm going to be looking for, and we can look back here as another example, is if NASDAQ is going to be losing 18.5, let's call it on 1 or 2 weeks, 3 weeks closing basis, this is going to be a target down here. And NASDAQ has the potential to pull the other indexes down with it as that's happening. Being said, as long as we're seeing sustained closes above there, I'm not super concerned about that. This was just a little canary in the coal mine that I was looking at. Let's take a quick look really quick at gold. So basically, the monthly closes of the market indexes were very strong. And gold, of course, also very strong. In fact, gold got the monthly close above the top band, which is signaling, where are we on the MRI on gold? Oh yeah, green star. So you're bullish on gold, right, Tone? No, you're muted. You're muted.
No, look at the weekly. So I
Oh, okay.
1 week.
Well, yeah, I'm.
So
Yeah,
I'll be bullish. I'll be bullish next month, but
yeah.
not at the moment. I'm
Not at
still
the moment.
dealing with the 1 to 4 weekly correction.
Exactly. So now let's take a look at this really quick. So as we can see, so gold is currently in this scenario where the yellow 21 is dropped below the mid Bollinger Band. It's trying to climb back above it. As soon as it gets back above it, I'm going to start looking for significantly higher prices in gold. But what this is telling me is that losing $2,400 on gold is going to open up somewhere between 2,400 and yeah, let's just call it 2,400. But not going to happen until this key support is lost. Let's see if another time frame. Okay, here we go. So now the 3-day chart on gold is showing us to be careful. So Tone, you are right. Like I was looking more of the monthly. Like the monthly close is telling me gold is going higher,
Right.
after corrections. So currently I have reason to look at $2,400 as a potential dip for gold. However, it's not going to happen until this moving average is lost. And we can see here, like this right here shows strong demand. However, you can see once you start losing the support of this moving average, this is like a magnet. This moving average is going to try as hard as it can. So basically on lower time frames, gold is kind of swimming against the current if it's going to be trying to go higher, which this just falls in line with my election analysis anyways. So what else? Um, someone had requested to take a look at gold versus Bitcoin, so we'll take a quick look at that. Um, I have mentioned before that I'm not expecting a lot of strength from Bitcoin until gold shows some weakness. Let me see if I've got a pattern on here. Let me zoom out. Yeah, interesting. Interesting that this horizontal right here is resistance. However, this is very bullish. Gold still looks strong versus Bitcoin. I don't see any weakness. There's a bullish cross between these two moving averages, and the price is trending towards the top band. It's kind of pushing into resistance. It's looking like it wants to go higher, um, which tells me that Bitcoin just kind of remains um, not super strong. Now let's take a look at the monthly close for Bitcoin, and we will see a much different look from what we saw with the Nasdaq and the Dow and gold. Um, the good thing is that it did close. If I zoom in, it closed above the 8 EMA, which is good. I'm not loving this posture right here. And this is something that we have to start watching long term, which does have the potential to start pulling Bitcoin down into the 45K range. Um, but currently, we see the price is holding below it. I'm not worried about with one month closing below it, like back here in 2021. We got one close below, two closes below, and then a strong close back above to get back to the all-time high. So one close below with the yellow above the middle Bollinger Band is not mega concerning. Two or three closes below, we'll start looking towards end of trend. We also did have a 4-month close, which is so close to just breaking out mega bullish. Currently, the top band is at 70,200. I kind of prefer this look on 2-month. One of the things I look for in the bull markets is that very first candle close above the top band on the 2-month chart. And there is some really important information in here. So currently, if we see the end of the year closing above $70,000, I'm going to be super bullish. And I'm going to be even more bullish because this last candle close confirmed the 21 crossed back above the 18 SMA. And we can look back here. that that was back in 2016, we got a double bullish signal. We've got the bullish cross with the price closing above the top band, and that was taking place right at the prior all-time high. That's what I wanted to see happening on this last candle. That would have been we would have the potential to see the price do exactly what we were seeing, what we were seeing back here. So here it is, the yellow 21 crossing above the 18, close above, up, 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 up. Now, back in November 2020, we got the same signal, and that signal took place at $30,000, which doubled the price and then some. So what we're seeing right now is We've got the cross, but we cannot get that close above with the price trending above $70,000. We can easily look left and just see like these wicks have been basically this wick at $65,000 has gotten sold into every single time the price has hit it. And it's going to be resistance until it's not. What we do
Hey
not,
Mark, put the MRI on this chart.
okay, we're in correction mode, right?
What?
We're in correction mode.
Yeah, we're in a correction mode that should be ending. I think I'm gonna go on a limb and say we are gonna close the year above 65. Above 70, I'm not sure. But are we gonna be I would take the under if we break the all-time high this year, but
Hmm?
I will say over on 65. Honestly, I think it's just gonna be uh a little more downside than up, then another pullback. I think we're not gonna get out of the zone until early next year.
I think you're right. I still would like to see some strength back closer to 65K by end of year. Um, because
Can you go backwards on this chart? Is this the index or is this it's a Bitstamp? Okay, that it doesn't have enough data. Like you gotta switch your charts to index when you're looking at these 2 month things.
you know, oh, I thought that was my index. Hold on. Wait. This one should be the index right here. That's the index, right?
No, that's something weird.
Oh, there's the index. Okay.
Yeah, this is the index.
I know what you're saying. I have looked at that and like the moving as yes, it does have more history on it, but as far as these long range moving averages, the difference is really negligible within like $50 or less. But still, so here what Tone is looking
Yeah,
at.
but what I really want to see is I want to see that I call it the acceleration line, the blue line get broken. It never
Yeah,
got broken after the last MRI top, but this one will break.
The MRI acceleration is sitting at $88,000.
Yeah, once that breaks, we're gonna shoot up.
Totally agree. And I think that breaks with just one close above 70,000. Let me ask you a quick question about the MRI tone. Um, so right here, we see the red arrow that shows us the top. This was the shooting star candle. So this candle on our very first stream, I said I am not expecting the price of Bitcoin to be above the prior all-time high until at least one, two, three, four, five 2-month candles. And here we are. We're on the third. We're on the third 2-month candle. That was a massive top. And as soon as the low of this shooting star got taken out, that's when the price action started to get bearish. That was around $58,000. We got to bounce up to kind of explore this part of the wick. Still couldn't take it out, and now exploring these lows, and we got a perfect touch off of the orange moving average, which we can see these were buying opportunities back here, which we got no closes below. Again, this is another simple indication. So here's the MRI top, and we're looking for 1 to 4 candle correction, and we're on the second candle. And so I think what Tone and I are both agreeing on is we'd like to see this consolidated and settled and strength into the beginning of the year. Correct?
Also, Mark, this could also be the third candle, right? Because the top was made the candle before the MRI top candle, right? So even though the MRI top candle is a green bullish candle,
Right.
it did not break the prior candle swing high. So you can technically consider the current candle the fourth candle of the pullback.
Okay. Now, what I wanted to ask you is this. When you have this MRI acceleration printed, and then this one comes next, is this still relevant in any way?
No, no,
No.
it's done. It's gone.
Okay.
But they're close to each other, so it doesn't really matter much. No, it's gone. Just like with the MRI support resistance lines, only the latest one matters.
Okay.
Only the active one matters.
So now Another simple look. This is what I'm hoping to do on this stream today is just kind of like look at these higher time frames and to give us an idea of trend, um, and when to panic. This to me is just so clear. It's like one close below the ADMA on the 2 month chart, and the uptrend is generally over. Um, Debatable whether this called the uptrend. I could argue it did because we basically never created a new swing high above 14K and capitulated down to 3K. So that kind of propelled Bitcoin into a mini bear market after COVID. So what this is showing us very clearly is we do not want to see a close below 51K. Here is the one exception to the rule, which we have covered on prior streams. And as it is, it took place on another long summer consolidation. So maybe a better way to put it is, if by chance we get some kind of crazy close, this is good. This is a brand new 2 month chart. Below here, we would absolutely want to see the next candle green closing back above. Otherwise, I start to get a little bit concerned. There was one cross. Oh, here it is. So I I'm all there are some similarities also to, all right, now I'm going to show another moving average relationship that I really like to track. Um, this is between two short-term moving averages, but when you're looking at a high time frame like monthly, they become super relevant. And we're getting a really bearish cross right now that is reminiscent of this initial top consolidation. And it's the only time in history really where this cross did not propel Bitcoin into a bear market. Let me take the price off. Okay, so now what this is, it is the orange 8 EMA crossing below the 10 SMA. And the 10 SMA is a really important moving average that is tracked in traditional markets. I use it in Consensio. And we can see here, going back to 2014, as soon, I'll put the price on too, just so we can see clearly. As soon as we confirmed this cross, that was it. And you can see, as soon as the red was flipped to resistance after the orange cross below it, that was bearish. And then opposite is true coming out of the bear market. As soon as the orange began crossing back above the red, so now this shows momentum. Now we've got the 8 EMA showing momentum versus the 10 SMA, which is going to be late to react and still drawing down. Once we started getting these closes, bull market begins. So here is the cross after the 20K top, and here is the confirmation right here in 2018 at around $8,800. Can't get back above the red, silent night. And right here, after the $14,000 run, we got down, 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 which caused the cross. The price whipped around, but almost tried to get that 10 SMA as support, but we can see it did not close above it. And then we got COVID capitulation. So we are in a little bit of dangerous territory. The only time that we've got this cross and it didn't really put Bitcoin into a significant bear market and the lows were already in was right here. But it took a 50% correction to do it. I'll zoom in to show. So if I take off the price, here's the cross. It took a 50% drop in price which in theory, I mean, we could even call that a mini bear market. And then we finally got closes back above both the moving averages. That condition is in place right now. So what I'm hoping for, to not call end of uptrend, is this is a correction over time more so than price. Because what is this correction so far, Tone? 32%. So that is a perfect bull market denomination correction. However, what is going to be very important in the following months is the red 10 SMA is at $59,000. That we have to see months closing back above that. If we start seeing $59,000 become rejected strongly in the next coming months, I'm actually going to start to get pretty bearish. And consider that Bitcoin is going to really struggle into the beginning of the year. Do you have any thoughts on this analysis, Tone?
It doesn't look good, but all I can point to, and you said it earlier, right? Time is becoming a factor.
Time is
Time is
becoming
becoming a
a factor.
huge factor. And I consider, and you can look at this as glass half full or glass half empty, right? The longer we consolidate and hang out in the mid to lower 50s, the more the picture turns bearish.
Yes,
But looking at the cycle structure, time is in our favor. The amount
yes.
of Bitcoin being mined is low, and the ETFs are chewing that up. Even though August was actually a negative month for the ETFs, they sold more Bitcoin that they bought in August. But Bitcoin's run the supplies of Bitcoin are running out. I see time as a positive factor, not a negative factor. Even if it turns the moving averages bearish at the start of the year next year, I'm going to be going all in on Bitcoin because of the seasonality and the 4-year cycle.
Okay, so here is what Tone is saying from a cycle standpoint. Here's a nice visualization of it. This is the bullish cross of we covered this on a few streams back of the 55 EMA gaining momentum above the 55 SMA on a 3-week time frame. That's a massively large time frame. These are hard moving averages to move at this point. So we've only had 2 examples of it, and they both came in early stages of the bull market. We got that cross in June of 2024, and these moving averages are going to continue to diverge. In theory, um, as this green climbs, it's going to be strength, but it depends on how late into the cycle it goes. Because if we look, it doesn't get tested until well after the top, and it's at that point it's not support. Um, the price dropped through both of those. Same thing right here. So it got tested well after. If by chance somehow early in the year we get this ugly old goat scenario testing down to $40,000, it would be mega bearish. But I do believe that because this cross is so fresh, that it should hold. I'm not anticipating that that's what's going to happen. What I'm going to do right now is I'm going to put on a couple of moving averages where we want to see hold. The first one is the 8. We can look back at the 2016 run after the cross, and that was our support. Clearly, that's not holding a support in this current cycle as trusted as it was back then. However, we can see in this cycle that losing it was not catastrophic. There are moving averages right here to catch these lows, and it's the 21 and 13 fib number EMAs right there. Okay, so the 21 EMA on the 3-week chart caught these lows perfectly. So again, we're assuming $51,000 is still a dip buying opportunity. And looking back in 2016 after the cross, it was the area of the gray and the orange. So where price is right now, even at $56,000, $57,000, is still a dip buying opportunity, as bearish as things may look. Now, I'm not suggesting go out and buy Bitcoin. You kind of have to have a long time preference for this, and you have to be willing to watch the price go against you, and you have to have an idea in mind of when to exit if you're trying to preserve a massive amount of capital. If you were buying lower below here, we're fine. But me personally, I would start to get a little bit more long-term bearish if the price is going to drop below these swing lows here. $54,000. Now, I'm going to show why I like $56,000. I gotta kind of dig into my moving average well here, where it gets a little bit confusing and looks like a rat's nest, but I trust all these moving averages. So now, right here on the 3-day chart is we can see this moving average, with the exception of this capitulation down to 50K, has basically been support. However, all of these moving averages up here, you don't even have to know what they are. You just have to know that they're bearish. And another point I wanted to bring up when I was showing the 128 SMA on the CME chart, I just poke around at so many different time frames. I wouldn't expect people to be able to find these little cheat codes. However, when I saw this rejection right here on the 3-day chart, that's when I began to believe that the top was in. We were not going to go any higher than $65,000. And lo and behold, and this is bearish for one reason, because the light green is still crossed below the dark green. That's the 55 EMA is still below the 55 SMA. So until we start seeing 3-day candles closing back above $61,000 long enough in this mess of moving averages to pull this green moving average back above it, this area is still going to be resistance. So here's my dip buy down to 56K, and I think it might be on the 2-day chart. Yeah, here's 57K. Here is the dip possibility. This current moving average is at 56.1. This is a Fibonacci number moving average. It's 144 EMA. If you just put Fibonacci numbers on moving averages and EMAs, they're going to give you all kinds of information. I mentioned before, if these swing lows start getting taken out, that's when I start to get a little bit more concerned, which would mean we're losing the support of this moving average right here at 56,003. So another way for me to put it more simply is I am seeing 56 to 57K as a potential low zone. Would love to see that holding into mid-September to get out of the 60-day cycle lows and maybe turn this September into a green election year month, closing the month higher than the open. If we're looking at the price below 56K, then I'm going to start looking at 54 and then perhaps lower. Tone, do you have a price target range if 56K is lost? Muted, you're muted.
If 56, 55K is lost, I'm going to wait till below 47. Or I'm watching MRI. I mean, that and reversal candles and capitulation. Like, I don't have a target. I don't like buying double bottoms. I need like at least 3 other things to align in the vicinity of a double bottom. Otherwise, I'm looking at significantly lower price.
Okay, real quick, I just want to take a look at this. I think this is currently a very important chart right now. And this is my Bitcoin dominance without the stable coins. So this is just versus the altcoins and versus Ethereum. I'm going to zoom in, but I'm going to put the MRI on because this horizontal right here, that is right at around $63,000. I think something massive is going to happen if and when it is broken. And I just love how clean dominance is. I don't even need moving averages. We've got these straight horizontals. We had this kind of ascending triangle pattern, which dominance broke out of. I felt very strongly. I had this magnet drawn way a long time ago in 2023 when the price was down, or when the dominance was down here. When this was holding, I felt it was coming up. Now, let me put on the MRI. There was a specific time frame Might have been weekly. Nope, I can't find it.
You gotta wait for it to load.
4 day.
Yeah, 4 day had a top.
Yeah. Well, here's my point. Let me see if I can find it on 3 day. Nope. There is an acceleration right at this horizontal, and I can't remember what time frame I saw it on. There it is, right there. Okay. So on the 12 hour. So what I am seeing is if and when dominance begins to break above this horizontal into $63,000. So now let me zoom out and just kind of look at daily so we can see what's going on. This is kind of, well, let me ask you this, Tone. Without knowing what this asset is or what this structure is,
It's
are you,
very bullish.
yeah, very bullish, right? Very bullish. So we're expecting this to climb higher. Now here's my concern or my excitement. We know that dominance accelerates in one of two ways, with price obliterating alts to the upside or capitulating to the downside. So what I am going to be watching closely here is what happens if and when dominance breaks above this $63,000 range. So do you want to take a gentleman's bet or a wager on what's going to happen, how that's going to happen?
I mean, I think shitcoins are gonna crash.
So first of all, let me ask you this. If you're just looking at this structure, where are we on the MRI? Green star candle on the 4 day. It's suggesting this is going higher, correct? Would you agree?
Yeah. Yeah.
Okay. Now, do you think there is enough momentum in what we're seeing to break this resistance right here?
Around end of year, sure.
Okay. So now, once that happens, we're going to see the price of Bitcoin either accelerating to the upside or accelerating to the downside, in my opinion. And the alts are going to get crushed a little bit or a lot.
I think Bitcoin's gonna go up. Alts are not gonna go up as fast.
So you're okay. So you're expecting bullish Bitcoin price action once this is broken.
Right. I'm expecting bullish Bitcoin, no alt season.
Got you. Let's take a look really quick at this chart.
Because there's no alts, right? Like only meme coins. And they're not gonna and they're all like, scammy pump and dumps. There is no altcoin that's sustainable higher. Like Ethereum ain't going anywhere. And Solana's time is running out, right? So what's left?
So this is Ethereum versus Bitcoin, and I brought it up a
It's
few times.
over.
It's
It's
over.
over. It looks like a disaster. It's puking out a lung from the symmetric triangle. This thing is going to new lows.
Yes. So now I have this horizontal here drawn. I think it might be cleaner on daily, but when I zoom in, we can see that this is starting to get lost as support. And now it's beginning to flip to resistance, which is not good for Ethereum. And here's something I think that's really important for Ethereum holders or altcoin holders to understand. In order for Ethereum to get back to the prior all-time high versus Bitcoin, which was printed in June of 2017, from where it is right now, is that correct? Is that right?
Yeah, it's never gonna go. It's never gonna go there. Like it's impossible.
So now let's create a slightly more bullish scenario. Just to get back to the 2021 cycle all-time high, it's only going to need 100% move
Never gonna happen. Against Bitcoin, never gonna happen.
versus Bitcoin,
It's never
right?
gonna happen. I mean, like again, if people want to have a general idea of what the future of Ethereum is, you gotta open the Litecoin chart.
Versus Bitcoin.
Yeah,
Oh,
and go to monthly.
you know that meme? You know that meme cartoon with the cartoon dog with the fire around it saying this is fine?
Yeah,
A nice reversal candle here, maybe.
probably MRI. Check.
Let's check. Now, when I see a reversal candle, just real quick, easy TA. When I see a potential reversal candle like this off the low, I look for the high to get taken out, and then that is a sell. The short-term moving average is a sell, but let's see where the MRI is.
No, maybe not.
No, wasn't on monthly. Got a green star on weekly. I would imagine
Litecoin is so done. Its mining structure is about to collapse.
I have this. Here's one I have not looked at in a long time.
I
This
thought it
is,
died, or I thought it already died.
well, it is still, let me see. It still hasn't printed new lows, but this is Cardano. So Cardano, to get back to 2021 all-time high, just needs 1,000%.
Hey, Mark, there's someone in the live chat that actually thinks Ethereum has a use case. It doesn't at all. No one, no one is using Ethereum. If you think Ethereum is the most used token in the world, someone is lying to you. Some random website is making random transactions on Ethereum and keeping the fees or something. Like no one uses Ethereum. Like 80% of even Tether's transactions are on Tron now. Like no one is using Ethereum. There has no use case whatsoever. It never did. It was all Ethereum is going where Litecoin's going. I think people are realizing Litecoin has no use case about time, and Ethereum's going to be there soon.
So here's Solana, which is one of the stronger alts.
I
Um,
think it is the strongest alt. I don't see anything else that's has been kind of been around for a while, right? There's always a shitcoin created 3 days ago that's pumping.
and to me, this is a super clean look. We don't need any moving averages or anything. We
No, but remember, but if it breaks the lows, if it breaks your
exactly,
red line, it's going the same direction as Ethereum and Litecoin.
exactly. So now
And
this is
eventually it will break the red line because, another, scammer will make a better Solana. Like there will always be a better Ethereum. There will always be a better Solana. But there will never be a better Bitcoin.
okay.
This is what people just don't understand about shitcoins. There will
So
always be a better shitcoin, which if you pay attention, you can get out of the shitty shitcoin like Ethereum and jump into Solana. And then if you pay attention, you can jump off the Solana train and buy the next scam early enough so that it pumps.
so would you say that, remember we were looking at that level of resistance on Bitcoin dominance? I think it was around 64%. If that breaks to the upside, I believe Solana will lose the support and begin to break to the downside, right?
Yeah.
As it is right now, it's kind of in a no trade zone if you're trying to trade this because it's just right in the middle of a consolidation. But as soon as we can see, as soon as this trend line was lost, support, resistance, and now it's just kind of like in nebulous land, waiting to see what's going to happen with the dominance of Bitcoin and what's going to happen with the crypto market. So one thing I wanted to bring up really quick, Tone, I did see some people talking about this. This is Dollar General, which
Mhm.
actually this is a potentially bullish pattern to me, believe it or not. Um,
Nope.
well, it only in that I'm not saying it's bullish. I'm not I'm not saying it's bullish. Well, what I'm saying is that people have been
You see the earnings drop, right?
oh
Or
yeah,
whatever that was. Yeah.
this is what I wanted to show. So there is concern. Like we're talking about Dollar General.
Jesus Christ. Well, have they been like accepting fake paper dollars or something for the last quarter? What the fuck happened?
Well, so this is something that um, it's a narrative that's going around of saying, hey, even like the economy is so weak right now that Dollar General's base customers, like I saw something the other day. I haven't verified this, but I saw something that Dollar General put on like an 80% sale on a massive amount of items, and their regular customers still were not biting on this. So this is a sign of some weakness in the economy when Dollar General can't even like draw its regular customers. And I think this was an
Can you check the chart of Walmart?
yeah. What is that ticker?
WMT probably.
Walmart's good.
Right. So what does that mean, right? I mean, is
I don't know.
Walmart cheaper than I've never been to a Dollar General. I have no idea what they sell.
It's like Dollar Store. It's kind of even lower level than Walmart. So yeah, I mean that's interesting. I don't know what to draw from that because clearly this is a strong. Let's see what
And can you
Walmart.
check Costco?
Yeah, hold on. Like Walmart is crushing it. I don't
Right.
even need to look at the Bollinger Bands, but I can almost guarantee you that's going to be above. Yeah, that's
Can you
just
check MRI? Can you open MRI?
yeah.
Uh-oh.
There you go.
Oh, there's
So
your top. Look at the
little
last
top.
MRI top and the one before that.
Yeah.
Yeah. And open Costco. Costco. Cost, I think the ticker is.
What is it? Oh, cost.
Cost. Yeah.
Looks like Walmart.
Doing great. And oh wow, second consecutive.
Second.
And yeah, what about uh Trader Joe's and Whole Foods? Trader Joe's may not be public.
Yeah, I don't know if it is.
Whole Foods is. Oh, you should put a space.
Is that it? That doesn't look right.
No. Is Whole Foods public, guys? Maybe it's not either.
I don't know. I don't know. So those are not nearly as bearish as Dollar General, and those are kind of like consumer as well. So maybe that information isn't quite as pertinent as what it appears. So maybe there must be something more going on with Dollar General to have
Yeah,
that.
I think they just can't compete with Walmart anymore. I think yeah, I think it's Dollar General. It's probably bad management.
Um, I don't know if I have
Oh
anything else.
yeah, yeah, that's right. Whole Foods is owned by Amazon. I totally forgot.
Oh, so here. Let's just take a look at this real quick for doom and gloomers. Um, Curve still is not inverted or reverted. Still just kind of lingering at the lows. So, Tone, let's talk really quick about the Federal Reserve and rate cuts. It seems like September is going to get a rate cut. I've heard people thinking it's going to be two or three. Do you think it's going to be two or three? Just one? And what do you think that will do to the market?
Right. Let me steal screen share back.
Sure.
As I've been saying for the last 6 months, there's going to be one rate cut. That rate cut will be in September, and that rate cut will be 25 basis points. This has been my position. This was the bet that I made on the spaces with, like, Joe, and he expected the rate cut to come earlier. I expected it to come later. So that's it. Just September, because the following rate is after the election, or like the day before the election, and it makes no sense. And what I have here is yesterday they released the latest budget numbers, and it's very interesting. There's only 2 months left in the fiscal year, just 2 months. And what we see right now is that the deficit this year is actually so far smaller than the deficit last year at this time by $100 billion, which is significant. So the government is running a better budget this year than last year, which is kind of hard to believe because of one critical line item here. Last year, the interest on federal debt was 561 billion at this time. Now it has become the second biggest line item at 763 billion. So there's $200 billion extra that the government is spending on paying interest. And the year is not up yet. There's 2 months to go, right? So with the next 2 months to go, I think this is going to be closer to 250 extra billion dollars spent on interest. And next year it's going to go up, and it's going to go up nicely again. The net interest, which I've been talking about this a lot about a year ago, has now become the second biggest spending item. So where is the government saving money this year? Well, national defense, the government also spent more money on national defense. So Social Security, they spend more money. Net interest had the biggest percent gain. Income security, which is unemployment, they have stopped paying unemployment. Unemployment benefits spending is down $100 billion this year. So this means one of two things. Either more people found a job, or the government is cutting people off from unemployment benefits. So I think it's a combination of both, which is also why I'm concerned about crime in America, right? If the government stops paying the unemployed people, they're going to find a way to get their money somehow, right? If it's not through a job, if the job market isn't hiring them and the government isn't paying them, how are people going to survive? The homeless population is going to go up, and petty theft and crime is going to go up. So we have to keep an eye on that. Okay, not that I want to spend more money on unemployment, but that is the statistic. So everything has gone up. Well, let's look at Medicare. Medicare was 657. Now it's 721. It also went up. And what about healthcare? So the difference between healthcare and Medicare, like Medicare is for like old and retired people, and healthcare is, like free benefits. That's like for healthcare is like for poor people. Medicare is for old people. That's kind of how to think about it. Now, healthcare last time was 741. Now it's 743. So it's in line. So the reason why the deficit is lower is because the government's making more money. They are taxing people more. They earned an extra $200 billion in tax revenue this year from individuals, and an extra, like $75 billion from income security, the retirement benefits. And corporate revenue is also up substantially. It's up like $80 billion. So the government is making more money by taxing more. or people got raises, or it's inflation, right? Don't forget inflation. But inflation affects both sides equally. So your taxes were higher, and that's what's preventing the deficit from going crazy. But remember, higher taxes mean less productivity for real productive people, because all that the government does with your money is wasted, right? They waste it on interest, healthcare, wars all around the world, okay? But they are paying less unemployment with your money. So it's mostly going to be defense and healthcare, Medicare, Social Security is supposed to balance itself, okay? They took in $1.4 trillion in Social Security insurance, and they paid out 1,213. So at least they're covering their Social Security benefits with how much they're collecting in Social Security taxes. Okay, so keep that in mind. The government did make $2 billion on that. Now they're supposed to save it for a rainy day, but as you know, the government will be spending everything. Eventually, when the Social Security bill is greater than the Social Security revenue, the government is in serious, serious trouble. Now, according to one of my favorite analysts, Chris Chiavaco, this is unlikely to happen. Um, a lot of people see this baby boomer situation working out really badly, where you don't have enough young people to pay the old people in retirement. The demographics are saying something else, right? So demographically, the government is okay on Social Security for now, but we'll see what happens in about 5 years. But don't sleep on net interest, which is insane how far it's gone up. Okay, so I just want to point that out. This is the latest fiscal year. Mark, any comments, questions on this before I pull up like two quick things and then we got to get going. It's been two
Yeah, go ahead.
hours.
Go ahead, pull them up.
I'm gonna close this. Let's look at the let's look at the probability of an interest rate lowering. Some crazies think they'll lower it 50 basis points. That's insane. Not gonna happen. Let me open up the yield curve. The yield curve is definitely pointing to an interest rate lowering. The yield curve is still inverted. The 3-month is at the top, so is the 1 month, so is the 6 month, so is the 1 year, and the 10 year is below it. So there you go.
Um, I didn't
Yeah,
see you switch. I didn't see you switch to the yield curve. Did you? Did you?
you don't?
Now I do. Now I do. I'm watching on the
Okay.
screen. You
You
had.
must have, you might have been watching on YouTube, which has a delay.
Yeah, yeah. It's a delay. Um.
So
So do you, so do
let's
you
see
think?
how the market did. Did the market reverse at 11 a.m.? It reversed for a bit, and now it's at new lows. Wow, this is $100 point day for the market drop. Interesting. Yeah, the
That's
market is down 91 points. That's substantial. Probably
that's
means Bitcoin is down a lot as well. They're super correlated.
yeah.
Super
And
correlated.
it's election September. It's someone wanted to take a look at at hold on. What was that ticker? Virgin Atlantic. It looks worse than Litecoin. Um, where is that?
What's the Virgin ticker? Is it space?
SPS, is it SPCE?
Yeah,
Yeah,
space.
SPCE.
Um,
Put it on monthly.
yeah, it looks like a shit coin. It looks terrible. It's terrible. I wouldn't touch it. It is coming up on an MRI buy.
Yeah, a couple months. Or on weekly. What are you looking on weekly?
I'm looking at monthly.
Monthly? Yeah.
Couple of months.
Yeah, I mean it might be worth so what I'm looking at, Tone, is like assuming the lows might be in just to get to the short term resistance moving average. It's a 200% move. Now that moving average will be dropping on the closes, but that might be a fun knife to try to catch. Just manage risk wisely.
Yeah. People are asking you about the election results. Honestly, I don't even know who's going to be on the ballot. I'm going to wait. I'm not making any predictions. I still think Trump, I think they're still going to try to take Trump out again. And I think Kamala ain't safe either. But Kamala probably unsafe after the election.
Unsafe. What do you mean unsafe after the election?
I'll save it for my YouTube channel.
Okay. Um, so what before we wrap up, I'm just trying to get to Bitcoin. Is it dropping? Is it dropping? No, it's not too bad. So let me just say this real quick, Tone. The general gist of what we've taken a look at is where the election's coming up. I'm expecting the stock market to do not too much in September or October, be bullish after the election, regardless of the president. Bitcoin, I'm seeing $57,000 as key level of support, potentially a dip buying opportunity. If lost, then those low to 53K area is in jeopardy. And the longer now that it stays down there, the scarier things get, because then we start getting moving averages on high time frames crossing over. That's going to create strong resistance to try to get back even above $65,000. But overall, the market structure is fine. We took a look at a couple of things suggesting we are potentially still in the early part of the uptrend, with the 21 EMA crossing above the mid Bollinger Bear on 2 month, with that 50-50 cross on the 3 week. And it's just a summer consolidation coming into an election cycle that is going to keep us guessing for a little while. But I'm not bearish yet, but I'm not bullish for the short term. What do you have to say,
Yep.
Tom?
No, I agree with you. I mean, it's just consolidation. Like, to me, Bitcoin price is very, very boring right now.
I
And
still don't.
somebody wanted me to look at Palantir. It looks as bullish as any chart I've seen in a long time. What does Palantir do? Is this the defense company that spies on you?
Um, I think it is a. I think it is something like that.
I always get uh Palantir and like Peloton confused. Peloton is the exercise bike, right?
Yes.
Right. I think Palantir is a defense contractor.
Um, Really quick, Tone. Before we sign off, can I share the screen real quick?
Yeah, it looks very bullish. I mean, I would never invest in this because it's an evil company, but yeah. So how is Peloton doing? How do you spell Peloton? There it is. Well, there you go. Build spy software and not exercise machines. There's a life lesson for you.
Buy software is more bullish than exercise machines right now in this current environment.
Um, yeah, it looks good. They had good numbers. Looks bullish.
Looks like a giant rounded bottom cup and handle type thing, potentially going much higher.
Roku had a monster comeback over its lifetime. Roku looks decent. I wouldn't buy Roku. Roku just has too much competition. Dude, you start thinking about what to watch and where to watch it, you end up like spending half a day trying to figure out what you want to watch and where to watch it, and then you just give up and go back to watching YouTube or Rumble or whatever. Or TikTok or Instagram.
Let me show something really quick, Tone. I just want to show this accumulation thing.
All right, then we got to wrap it up.
All right.
I got a bunch of work to do for unconfiscatable.
So a couple weeks ago, here, let me think. Maybe yeah, here's a Wyckoff accumulation schematic, just one of many. Um, and I'm still holding up this chart. I still believe this is the 12-hour chart. Let me zoom out a little bit because it's hard to see where it's coming from. There we go. So, and when, so I'm still seeing this. I'm still seeing 50K as a spring, so which should suggest, hopefully, that that is the low. I love this volume bar. Love it. That is absolutely exactly what you want to see on a spring coming out of accumulation. But we're still, this area is called LPSY, last place of supply, still trying to find that final place to get some momentum to get back up here, because really this accumulation pattern is not going to, if that is what it is, it's not going to show any kind of strength until we're above, we can start getting a little bullish above 65K, but it's really not going to get any momentum until above 68, 70K. And then the other thing I just wanted to take a look at real quick, Tone, is I showed this several weeks ago. This is that Livermore accumulation pattern, which kind of suggests what you and I were talking about at the very, very beginning of the stream, that the S&P still has significantly higher to go. Like
Oh yeah.
if we look at um, the schematic, right? There's a massive move. This is basically a hyperwave. This is a hyperwave. There'll be a spike up, there'll be a massive drop, a 50% bounce, and to a lower high, but we're nowhere near that. It's potentially just really starting to ramp up. So if we're looking back up here in this $10,000 range, we can still see that this has a long way to go. But I do I I do think that it's going to be very difficult to prevent the S&P from some kind of a massive reset into the 2030s. Um, maybe it's controlled at just 50%, but it could be something that brings it all the way back down to here or lower. But that's all I
Yeah,
got.
but we'll deal with that in 5 years.
Yeah, we'll see. Bullish
Yep.
for now.
Oh, definitely bullish. All right, Mark.
All right.
Time to close us out, and I'm gonna show the unconfiscatable website once again. I am gonna be hard to get a hold of over the next week or two as we put in the final touches on the event. Come and join us. This will be the final unconfiscatable. The tournament will live on, but as far as carnivory dinners go and scammy awards go, I mean, maybe we can bring back the scammy awards during the poker game. We'll see. But as far as having some kind of speakers on a stage, that all is coming to an end. I will just bring the poker tournament. I'm gonna make some cool custom-made poker chips, and I'll bring the tournament to other conferences around the world. But come and join us. Your last time. I'm only going to be at one other event this year, and that's going to be in El Salvador for adopting Bitcoin. I haven't really done events anymore. I am ready to take a break from public speaking, and yeah, so this is it. So come down to Unconfiscatable and join us. There will, of course, be the event in the Maldives. This is the financial summit. That's not going anywhere. Now, the financial summit will be in the Maldives. Another chance to join and hang out. Hopefully, Mark will make it as well.
Awesome, Tone.
All right, guys. Thank you all for watching, and see you all tomorrow. maybe with Matt McGregor. We'll see.